We have a challenge, so we have undergone stress. There was a time we can't even look at and think of growth. So we only look at sustaining what we had. How can we protect ourselves and protect our customers? Now we have seen some light end of the tunnel, what is going to be, economy is going to take, what is happening around the globe. Last 2-3 years, we suffered from a scarcity of foreign currency. So the bank consciously focus on driving exports. That's a key focus for growth.
Welcome to Shapers of Tomorrow, an Echelon series featuring leaders in the financial sector. With us in the studio today is Damith Pallewatte, who is DGM Wholesale Banking at HNB and by virtue of that role manages one of the largest financial sector asset bases in the country. Damith, it's good to have you in the studio with us today.
Pleasure to be here.
Let's start with a question that looks at the economy and HNB's credit portfolio broadly, Damith. If you look at the current economic environment, how do you think your portfolio is positioned, particularly the wholesale portfolio? Because this is your big direct remit at HNB.
I think it's a very pertinent question, Jamendra. Now, if you see what has happened over the past few weeks or months, everybody spoke of the DDO, what is going to happen for your government securities, what are going to happen to your ISBs. But the elephant in the room have been always the credit portfolio.
Right.
So that was what is given the most stress to the bank in terms of its impact to the bottom line and also the quality of the balance sheet. So if you look at HNB is across all segments. So though I'm heading the wholesale, if you look at HNB as a bank,
Sure.
so it covers from the small microfinance, cottage industry up to SMEs. Then we nurture those large SMEs to emerging corporates and then comes to large corporates and multinationals. So we have a good cross sections. So we have seen where those stress points, building up as a result of the journey that we had from 2019, which I'm not going to repeat, everybody is aware, right? So that created a lot of stress in that segments where the SME businesses are hovering around. If you look at the wholesale portfolio, so those are the affluent businesses, corporates, they have reserves that they can spend, they have access to capital of shareholders of some sort. So we have seen comparatively a less stress in wholesale portfolio. And also when the rates go up, and when the rates fluctuate, they get the benefit immediately because most of the portfolio is on floating rates.
Sure.
So then you don't need to fix to a certain interest rate over a period of time.
So it must be challenging to manage risk in the portfolio right now because you want optimal yield on your credit portfolio, but at the same time, the risk parameters have changed drastically in the last few years.
Absolutely. If you look at specific industries, like there were certain industries like the construction, tourism, right? So they were under severe stress. So we have supported those industries very much because if you see what happened before 2019, there were so many infrastructure projects, so many private construction projects that was in the country. So banks supported them. There was so much of condominiums. So those are the ones which stopped halfway. Now there is no point bank acquiring them. There is no way that the contractors or developers continuing them. Your costs have risen so much. So then those industries, then the tourism, we all know where it has moved in. So then the agriculture, we had unfortunate events leading to crops and the yields going down as nothing. So the entire value chain has becoming under severe stress. When you take those portfolios and when you mix with good risks, so we are still they generate some kind of a revenue, so then we can compensate those risks that we are undertaken. So at the same time, even though we are running a risk, we can't let the industry down, we can't let the bank down, and we can't let the businesses down. Banks are there in the economy for a purpose. So it's not when it's raining, we can't take the umbrella out. So we need to support as we go on. So then just because the risks are high, that's where the challenge. Everybody will say risks are high. How do we manage is a challenge. So when we understand what it is, what risks that we can manage, what risks that we can accommodate and continue to support, rehabilitate and revive. I think that's where it is important. Anybody will say risks high, but beauty is that how do you manage those risks while supporting the journey.
Let's for a minute talk about HNB's wholesale banking strategy. In the current climate, current macroeconomic and commercial climate that Sri Lanka faces, what is your specific strategy around wholesale banking? This is the banking, or this is the lending that goes to the big companies in Sri Lanka, the listed, highly rated corporates in Sri Lanka. What is your strategy here?
So if you look at wholesale banking, I have seen a lot of people using as, it's just another word. No, there is a lot of in it that wholesale banking, the name itself, it encompasses 4 segments.
Right.
It's not only conventional, your lending products and the deposit products. Yes, that is required. So that is part of the business. But in addition to that, so you have your cash management, the payment and collection strategy. We call it the transactional banking. So then you have the investment banking piece where you have get access to your capital markets, and then we have your access to securities. So that is why if you put all these 4 together, then you form your wholesale banking proposition. So even your margins fluctuate. So if you are running a proper wholesale banking proposition, you still can manage in between, because your fee income to interest-based income, that composition is quite different if you run it properly, right? So if you look at transactional banking, so you support the customers, payments, collections, you support through the value chain, not necessarily the individual firm or the corporate that we work. So in the process, while the funds are flown through multiple accounts and multiple banks, the wholesale banking proposition is set to drive some of the fee income through that.
If you contrast for us fee versus fund income bank wide, and how does that compare with what the ratio you have at wholesale banking?
If you look at the lower end of the business, like the microfinance and the SMEs, they need funds. They need working capital, they need capital expenditure, and their requirements are simple. There are no complex structures that we need to put it across businesses to. In those businesses, interest income, the NII is fairly high. I would say 70-30 or 80-20. But if you drive a proper wholesale banking, it should ideally, maybe 50-50 or 40-60 in terms of 40 NII and 60 NFI. But, it's a journey. So we probably still at 60-40 kind of a combination.
Wholesale banking would be competing for a pool of funds available in the bank that you will acquire and lend, because, you'll have to look at what the yield that wholesale banking can bring to HNB versus what SME banking or microcredit can bring. I'm sure the yields are lower in wholesale banking. Risk is a different picture. How are you approaching this balance currently?
So let me put it that way. Now, the banks are kind of institutions which are pertinent and pivotal in economic scenario. If you look at the big picture, banks exist for a purpose. So within that banking sphere, there are multiple segments which service different kind of customers, right? So wholesale banking is one. You rightly said your yields are down because our risks is the top tier risks.
Sure.
So we don't go down to triple C's and C's. So then we remain at a certain level. Your risk is low, your yield is low, right? So on the other hand, if you go a little down the line, so SMEs, microfinance, even for emerging corporates, so the risks are high, therefore your yields are high. But you can't look at wholesale proposition in isolation. So that's something very pertinent so we drive very focusedly, because wholesale brings a value chain into the picture. So you have your small businesses, SMEs, microfinance, cottage industries, and they deal with your wholesale large corporates. For example, think about a large supermarket chain. There will be thousands of SMEs supplying so many things to that particular entity, which is a wholesale banking customer. So we can't look at that wholesale banking proposition in isolation. What facilitation it does to manage the cash flows and those small businesses is something that we are very conscious.
Sure.
So even though The yields are low, we run a low risk, different story. But the facilitation it does through the economic life cycle and those small and medium industries is significant. So we still think wholesale banking is a proposition that we need to continue to nurture in the bank.
Damith, despite the current economic climate being a challenging one for everybody, particularly also to banks, you, in your position, you have to be thinking about how you're going to grow this segment, how you're going to grow wholesale banking and your business in general, right? You can't take a defeatist attitude to this climate, right? How are you approaching that challenge?
Good question. We have a challenge, so we have undergone stress. So there was a time we can't even look at and think of growth. So we only look at sustaining what we had. How can we protect ourselves? And through that, how can we protect our customers? So you need to stand strong for you to protect your customers. So that's what we did. Now we have seen some light end of the tunnel, what is going to be the future looks like, what is likely stance the economy is going to take. We have an understanding what is happening around the globe, because if you look at our focus this particular last 2-3 years, we suffered from a scarcity of foreign currency. So everybody who never knew how these dollars come into the country, how it is spent, have become even experts of telling these are the dollars we earn, this is how we earn, and this is how we spend. So the bank consciously focus on driving exports. So that's a key focus for growth. So Sri Lanka as a country, if you look at our balance of payment, you see there is a sizable gap in between imports and exports. So if you look at some of the Far Eastern countries, probably 10, 15, 20 years ago, how they grew and managed that balance of payment they have created large export industries. Sri Lanka has few export industries. But unfortunately, the bigger export industries are part of import industry as well, because they import majority of their raw material to make the export. So your next export retaining in the country is much less. So in addition to that, if you look at some of the industries like seafood, so we have the sea right around the country, right? So we have enormous potential. How can we, develop that industry? Then the agriculture, spices, tea. If you name, there are so many, and we have so much of a good rubber industry. So what are we going to do with them? So those industries need to create to us level which are not medium or large size. Those has to be extra large size, create an impact. So the bigger institution, bigger corporates need to take the lead, and the banks need to support to create that export-led growth in the economy. That is number one.
So that is something you want to capitalize on by positioning yourselves
That's right.
to do so.
That's right. That is number one. Number two, whilst export is a growth and the focus, so what are we going to do with the revival, rehabilitation piece of the customers who have been doing import substitution? There is a manufacturing industry in the country which, dropped their production operations levels maybe as low as 20-30%. So what do we do to revive them?
Sure.
Now the import restrictions are going little easy. So there was so much of those banned items are now released. So how can we facilitate? So that creates the employment.
Sure.
It not only runs the factory, it creates the employment, and it creates a fund flow in the economy. There are so many activities, get started. So one of the key ideas in industry revival is not only run that particular plant. So associated, there are so many value chain pieces that we can bring together.
Sri Lanka, Damith, is putting up a special economic zone for services. We popularly call this the port city, right? But it has legal and regulatory frameworks optimized to attract service sector investments and create an optimal climate for them to function in, right? We've done this with manufacturing. Now we're doing it with services. How do you think the creation of such a special economic zone will transform Sri Lanka's economic fortunes, and how will that affect, you think, the business that you're in, which is financial services?
Port City is a significant project for the country. It took some time to take off the ground. I think now it has some traction visibly available there today. It is significant in multiple aspects to the country. It is not only bringing foreign investments, but it creates a separate jurisdiction within Sri Lanka where there are investors are confident enough to bring money and transact in foreign currency and take it back. Always otherwise being, so there is some doubt in the minds of investor arising from various reasons, including policy inconsistency, dollar convertibility. So all those have created some doubts in the minds of investors. But now this jurisdiction, once it's the legal framework and the regulations come into be, it's a free zone, something like Dubai International Finance Center. So what does that facilitate? So it allows investors to bring money and do whatever the transaction and facilitate in the port city, and if you want, take the money back wherever you want. So that helps the banking sector differently. Now, for you to go and set up a shop there, you need to kind of get a specific license. So that license enable you to get your inflows, investment inflows through within that jurisdiction that you are setting up, which is a comfort did not have for banks.
Sure.
So if you consolidate, it's like a bank going and opening a branch in a foreign
country. Yes.
So it's costly, but here it's not costly. So for a lesser cost, we get the same access to the funds we don't have otherwise. So that is from an investment point of view. In addition to that, from the transactional flow point of view, so even though the investment in this is kind of a hub that we are creating. So you can have a business running in the country, in the mainland, and you can have your trading service organization in the port city. So then through port city, you reach the world.
Sure.
Right? So that transaction flow creates so much of business in the ecosystem. It's not only the investment flow that we are looking at. So the banks can be busy doing this transaction, not only looking at the investments, so that it creates so much opportunities for them to connect with those counterparties and enhance businesses while entertaining those dollar inflows to the country.
Damith, you will be taking over leadership in HNB in the future. Sri Lanka has come through a fairly challenging period. But you will be looking to the future and trying to sort of understand what your strategy is going to be for at least the next 10 years, right? How is that looking like? What do you think HNB's strategy, or what do you think HNB in the next 10 years will be like? How will it be different to the past?
HNB is a bank with a 135-year history. So there are legacies carried through centuries-old banks. Right? So it also says it survives all the hardships that it has come through. That means it's a steady, stable counterparty. So when you take over such a strong institution, which has a track record of hand-holding multiple generations of businesses in the country, right? So it has to be properly thought through. Where are we taking those businesses and individuals with the institution into the future? It's easy to say we will digitize it, we will give access. So how are we facilitating it? So we would like the journey that HNB took with its customers, take it to the next level, understanding where the banking is moving in the next decade. So the banking, traditionally somebody coming into the branch and meeting a relationship manager for businesses or meeting the counter staff to do the banking transaction. It has come a long way. Banking in future will become part of a service pack. If you go to a department store, there are so many services available.
Right.
So banking also will be one part of that stack going to be in the future. And the technology also impact very significantly. Meaning there are fintechs that will coming to the banking sphere. There will be transactions that are happening through blockchain, so that your intermediaries will not be there. How do we make these things understand to our customers? One of the key strategies that HNB will continue to drive even in the next decade, how do we take our customers to transact at their convenience? They don't need to stick to 9 to 3 or 9 to 5 or whatever. How can we make their life more convenient, making banking more enjoyable? So then it becomes a part of another service pack. That is one. That strategy to achieve that is not straightforward. Then the second, if you have seen what has happened over the last few years in terms of talent exodus, so the brain drain has created so much of challenges. So we need to develop, groom our people to take our customers and businesses to the next level. So they will be the advisors. If you see in the global context, banking jobs will not be much interesting future. That's the fact, right? So we need to find and strategize structures that work for banks to continue. So that's the challenge. And the third thing is the operating models of banks as well as in HNB needs to take a tweak. So your cost of compliance, cost of risks is very high. So if you want to manage that, so you need to unwind the parts of the bank which can do it as kind of a shared service. So then your costs are managed on a different structure. So those will make the bank lighter, the bank agile. So then the customers will find that consistency, convenience, and the joy in banking. So that is one aspect. The second aspect, HNB is a domestic systemically important bank. You have 4 DSIBs in the country. So it has a responsibility to align itself with economic growth. So we need to set sight on our strategy in alignment with where the country has to go. Like it did, handhold the generations of businesses, even into the future, that we will do the same thing to support the economic revival. So those are the few things that, we will look at into the future in implementing.
Damith Pallewatte, thank you for taking the time out to join us in our studio.
Pleasure. Thank you very much for having me.